私を。
Price $952.
銀座ジュア欲中で巻き。男には。
Welcome to Home Box Office Subscription Television, bringing you great movies, sports events, and special programs, unedited and commercial-free. It's good to have you with us.
All right. By my clock, it's 7:30. By the way, I want to give a shout out to my buddy Jason Sanders for these great vaporwave mixes that you hear sometimes on this channel. Most of them come from him. So if you like this kind of stuff, check out his channel, Jason Sanders. Look for the guy wearing 3D glasses. That's his channel. Okay. Having said that, let's do this. Let's do it. There we go. There we go.
Roll another blunt, man.
Join it up.
These is good times.
All right. What do we got today? Oh my gosh, we got so much. So much. Hope everyone had a good day amid all of this. Wow. And, well, let's just jump right into it here. Is AMC stock a waste of time? Is it a waste of time? Avid trader is asking the question, I guess.
Today, I want to show you why I parted ways with AMC and also why I believe it's a waste of time to continuously do videos on it. Before we get into the technicals, I think it's important to understand my history with the stock. Now, going back to 2021 in January, I was a part of this run from $1.90 all the way up to 20 or 25, whatever it was. And it came all the way back down. And then I started making videos on YouTube about AMC and how I believe it's going to go parabolic, all in this range, $5, $6, $7, $8 range. We were all talking about it. It was, the biggest thing in the markets besides GameStop. Okay, so I witnessed that, held all the way through the run up here, and watched it play out all the way until the split where the AMC preferred equity unit ape. Okay, that is when I exited my position. I was not around for that part of it. That's when the stock stopped making sense in my eyes. Okay, now you understand my role in it. What I'm seeing visually right now in current day, all we have to do is remove all of our emotions, remove everything we think we know about the stock, and just look at it. All we're seeing is this downward slope, almost.
Would you just look at it? Just look at it. All you have to do is look at it. Sorry.
It's like a 45-degree angle. No major buying power, no huge squeeze or spike or break of this trend that would make you really get excited. Because the consistent lower highs and then also lower lows is not really making an investor able to profit. It's only good if you're trading.
Whoa, you use the I word, investor. Come on now. We're not investing in AMC. We're not even trading it. We're buying and holding it. Degenerate buyers and holders. Okay.
Have cash on hand when it hits a key point and gets a lot of demand, really. And the reason why is, let's say, for example, you're buying in this range, goes all the way down from $65, to 30. You're down 50% of your position. As it starts to run back up, it only retraces 50% of this initial drop. Okay. And then goes all the way back down. So the only way you're making money on this is actually trading it, not investing in it. Okay. And the same thing happens.
There
we go. Say you buy, anywhere, and let's just say you buy in this, $30, $39, $40 section or $50 range, breaks all the way down to a low here of $13 and goes back up to 30. So you're basically being able to break even on such a short period of time because it happens so quick and then gets rejected.
Doing that anyway.
If you bought on the low end of this section. So
and why would you
from 70 all the way down to 50, down to 30, down to 12, and then you get a short little pop to 30 and then just continues to die. 27.50 and 27.20 all the way down to 10.75, down to 9.15, down to $8. So there's been no investment opportunity here. It's been a slow bleed. It's been destruction for nearly 2 years straight. And that's why I don't like to continuously talk about the stock. If we're going to trade it, that's different. Okay, but again, we have to look back at the actions and everything that I said. Here was the time to get out. That's what I say. I will say it till the end of time. Okay, this was $20, $25, $27, and then it took a huge gap down and got crushed to a low of 789. Not but, let's say 2 weeks after this was announced. Okay, so massive drop here. Now, why is this still not something that I'm crazy bullish on, even in today? Well, when we go over and we see this range that it's traded, this goes all the way back to September here of 2022. So like we mentioned before, 1075 was the top here, so you could visually see it. 1075, this was 915, and then we'll just call this 850. I don't know the exact number on here, 8 and change. Even with multiple opportunities of big volume, right? We see a cluster 125, 132, 151, and then nothing. This was all just sell off. There was no juice to push it back up, to fill a gap, to do anything here. It just continued to fade.
Well, that's the
Now,
ape.
as we got another opportunity here, what we
And that's where ape came out right there. So, just explain that gap.
saw is 96 million shares. Okay, so nearly 100 million. The chance to try and retest highs here or breakout didn't have the juice. So this was a second retest lower high rejection. Now, as we come up on our third time, which I actually believe this was the best looking setup out of all the three, right?
Yeah.
We had 122 million, 113 million. It took the stock from a low of 430 all the way to a high of 853, nearly
Double your money.
100% gain. It's running. It looks great. And then earnings comes and the same thing happens with the stock. It gets knocked down. So any sort of expectations you have for the stock, anytime you start to get this feeling that something good's happening, it continues to prove wrong and just keeps curling back over. So it's truly a disappointing stock or a letdown type of stock if you're an investor here. The big thing is the 200 for me on the daily as well. Just these little spikes and they never end up holding. Same thing. So until it really breaks and holds and starts to close above the 200 day, and that would be around $9.63 or consistently at 10, then I'll be happy. Now, here's another alternative that you can look at that I think would even make sense. And on the highest end of my valuation, because I don't believe there's any way to get back to these levels. Okay, I think you would need just absolutely insane.
Yeah, clearly not. I mean, we're not in valuation range here. That's not really the right terminology to be using there to describe that section, in my opinion. Valuation, I mean, technically, sure, okay, but this has nothing to do with fundamentals. It has nothing to do with AMC, the company. It has everything to do with a group of newer investors who essentially tried to corner the market. They tried to corner AMC stock and whatever degree of success was had back here in June of 2021. Yeah, uh, everybody else figured it out, and learned and adjusted, and and essentially the market corrected this inefficiency. This is an inefficiency, and we've talked about this before. This is irrational. This is an irrational spike. This is not grounded in any fundamentals. What was AMC doing at that time? What were their numbers? What were their financials? Terrible. Um, so this has nothing to do with valuation, in my opinion. It has everything to do with mechanics of the market, which ironically, the apes don't really understand. They don't understand the mechanics that basically entice them to come in and stay and buy and hold. So we're going to talk about that part of it in a little bit. Um, I have a video that goes with that really kind of spurred me thinking about this last night. And Ron knows which video I'm talking about. But let's just continue here with what Avid Trader's saying. So he says it's a disappointing stock and yada, yada, yada. Okay.
volume. I don't know
Can't
where it
disagree
would
with
come
that,
from.
really.
It just doesn't make any sense in my head how we would get back to a range like this. But what I do see is realistic, for example, would be to break out and sort of have one of these moments again, right? And come right back and do that. Okay, that would be the same exact thing. This would solidify the third false
This is exactly
break
what
of
we've
this
said.
200 and come back down. And also what it would do is it would continue this macro trend. So if we look back, you see the pattern. So even if this went up to, let's say, $20, somewhere in this range, 16, 17, 18, could still be even 20, anywhere in this range here, it's still continuing this macro descending support, right? And it still would be fading. So that's why I just don't have a lot of faith here. It's in a movie industry. It's not where the future is headed. We look at their investment they did in HYMC.
Oh, dear.
I mean, again, look at it. 33 cents, you know, it's all the hype back at $3.
Well, and again,
it's now down.
Was this really an investment in Wyckoff Mining? Was it really that? Or was there more to the story? You peel back the layers of the onion, it really sometimes seems like we're reading a story on the onion. But no, in fact, this is r/not the onion. This is reality.
Down tenfold. It's actually close to.
But the apes are prime candidates to eat the onion. r/eat the onion. So the onion. I love
hitting
onions.
all-time lows.
I love the onion.
Okay. So all-time low here on the chart is 28 cents at 33 cents.
That's what we need to do.
So you can understand.
Make an onion style website that is about finance. So like CNBC, but the onion style.
Why, you know, also what they invested in.
After the MOAS, when I can quit working, that's going to be my first pet project.
What everyone was just as hyped in is also doing the same thing as AMC, right?
Well, the only reason they were hyped because of AMC.
Here's the top.
Nobody even heard of this shit before.
Lower and lower and lower and lower. You guys understand? It's the same exact thing for the bottoms, right? Okay. So that's why I feel the way I feel on AMC. The only way it would make sense is if you saw volume like this, where the big spikes were, right? This is where that 20x, or we'll just call it safely 10x flip here, 1 billion shares traded. And then when we saw all-time highs, we were at mega volume. So 500 million, 700 million, 600 million, 800 million. Those were the times where the price was really roaring.
Those were the days.
Okay. And if we zoom all the way out, just so you can get a visual look, you see that the exponential factor here, right? Majority of this trading is in this small box, right? But where we need to be is really in this range. Okay. So you can see just by the differential here, in that, look, you look at the range. You know, it's 3 or 4x, you know, these peaks here, you know, these are all less significant volume days. And, you know, it has the move, fails, has a move, fails. Again, same thing. If we pull the volume up, 27.50 fails right here, $8-9 fails. So all these times.
Are they really failing though? I mean, I would argue that these, well, let's just call them pumps and dumps. These pumps and dumps achieve exactly what they're supposed to achieve. They're not failing. I mean, if you're looking at it from a bullish bias, sure, yeah, it fails to continue to go up. But why would it continue to go up?
Where we have the spikes in volume, they are correlated with the moves that are weaker and weaker and weaker.
And they are weaker.
So you get to this type of volume, then we'll talk. That's pretty much it with AMC. There's no other catalyst, nothing else that makes sense. I know you can go for days about what it should be. I agree with you. I do believe that this is fraud. I do believe it's manipulated.
What?
I do believe that there was, you know, billions and billions of digitized or tokenized shares through FTX and other companies and fraudulent transactions. What? Could this be, you know, one of the massive inside jobs or biggest inside, you know, cover-ups on a stock?
Crime of the century.
Yes, of course it could be, and I'm sure it is. Was all the...
sure it is? Oh, wow. I'm glad we stayed around to the end of this one.
CEOs had to be compliant. Was there, you know, above their pay grade type of mentality? Very possible. There's so many factors and craziness. And that's actually another contributing factor as to why I just want to get away from it. I don't want to keep talking about the legal part or suing or going down the road of fighting back. And it's just a huge headache and a big mess. And I'd rather focus on companies that don't have, every single cabal hedge fund against them trying to destroy the stock. Okay. That's very simple. It's a very easy way to put it if you want me to be completely honest with you. So that was my assessment on AMC.
So now he decides to be completely honest with us. Cool. Naked short story. The fraud continues. AMC GTII. This is from 1 month ago. I'm not watching 36 minutes. $1 million exit plan. AMC GME stock 1 year ago. AMC chart. Will the stock squeeze 1 year ago? We'll catch a little bit of this.
Yesterday we got a nice green candle pushing up, and I thought that today we have the potential to complete a second green candle. All right, currently the volume's at around 4.5 million in the first 15 minutes.
And in this instance,
so
1 year ago means
yesterday
December
2021.
2021.
But that's not what I want to focus on. I want to divert your attention right here, which is November 24th. What we saw here was a sub 20 million volume day, or 18.2 million on the daily. That was an 11-month low. And why is this significant? Well, if we go and look at any major run up where there was high volatility, what are we seeing? Well, one, we're seeing
saying the same thing, volume. Okay, yeah. Chart
cycle that it's lining up with that just wouldn't make.
Look at this.
I don't expect any massive, rapid, just skyrocketing to the moon like that. Okay.
I gotta pause the video for this one. Raven. Well, we've been wondering where the hell you've been. It's nice to see you, man. Like, really. This is a nice unexpected surprise. Welcome, my friend.
Okay, the volume's not there, and also the cycle that it's lining up with, that just wouldn't make sense. So again, everything is relative to where the price is now. Obviously, 10 cents is more significant when we're trading at $1.90 as it is compared to.
Oh, here's that wonderful whatever they called that. What was this? No, it's not a wedge. It's something or other. It's bullshit is what it is. Ooh, and he even tried to move it a couple times. He moved it and it still failed.
Trading at $30, right? Okay, because it's around 15x the price. So if we were able to move up, let's say $1.50 every day, and this sort of line, we get that move up. Let's say it finishes somewhere around here, okay, and then the next day maybe it's here and here, and it pushes up again.
Okay, that's not true. Wyckoff mining cycle. Oh yeah. See, the worst thing that the apes ever did was get into Wyckoff theory, because and Rico, because they thought that they had the key. Oh, this is the key. Every stock follows this pattern. Well, then the lock was changed on them. Descending triangle, sure. It's inaccurate. It's what it is, but okay. Maybe what? Since Ron's here, maybe we should go to this video, the video from last night. So I'm dumbfounded here, to be honest. I have to admit, I am at a loss. But we'll do it, and I am going to take the approach that this is basically this is like a laboratory experiment or a laboratory observation. And I'm going to try not to, and this is the key word is try, not to be abusive. I know that probably disappointing to a lot of people, Lynn especially. But well, where is it? I'm gonna have to just search for it. Big move incoming. But I just want to look at this from a, where the hell is he? I just want to look at this, from a standpoint of, okay, what's he saying? Does it make sense? And can we possibly correct what he's saying? Or is it too far gone? Ron, you may be right, okay? You may be right. But, you know, if there's this much misunderstanding and just flat out just like fantasy belief about how it works, I mean, you almost have to, this is almost like it's almost like a call social services moment or, you know, involuntary commitment or something because I don't want to color your perception of it too much more than I already have. But let's listen to the Marine, Mike, the Marine, um, explain market mechanics. And this is what I was referring to a bit ago when I said that, ironically, they don't understand the market structure that the mechanics that brought them to where they're at, yada yada yada. Um, okay, you've been warned, and I've made a disclaimer that I am trying to look at this just as an observer and not get too invested in this personally because I don't know this guy and I don't care to know him. But this is what people believe. Okay. This is what these people, some of them at least, one of them, and he said that somebody told him this. So people believe this, or um, in any case, people have a wide variety of beliefs and understandings about the way that they think the market works. And this is one of them. All right. I'm getting a countdown. My producer's telling me I have to go. I have to go on. I have to push it out. So we're going to push it out. You've been warned.
Just got interrupted by the
Been
kiddo.
fucking warned.
What I was talking about was my way of seeing it, trying to hear it via DMs.
That should be a red flag right there.
There's so much things that a lot of us, including myself, do not understand when it gets into the math and market mechanics and all those things. But this totally made sense to me, and it's like I visualized it in a certain way. And it was talking about and I think it has to do with the technical side. But when you have a certain amount of shares that sell off, you have this float, right? This float size. And a certain amount of those shares sell off, they can pull that little bit of that value depending on how much there are with it. So if that share sells off, so what I'm leading to, this is what I
I'm going to stop right here. I'm going to stop right here and go back and try to follow this.
Visualized it in a certain way. And it was talking about and I think it has to do with the technical side. But when you have a certain amount of shares that sell off, you have this float, right? This float size. And a certain amount of those shares sell off.
A certain amount of the shares in the float sell off. Okay.
Pull that little bit of that value depending on how much there are with it. So
pulling value with it.
If that share sells off, so what I'm leading to, this is what
let's see his example.
What I comprehend. Let's say you've got a float of 100,000 shares, or let's just call it 100 million shares, right? You got this float, and you got those shares that are out there. People are holding them, and then some are selling them. How many are selling on a daily basis? And so, if on a daily basis,
what about buyers?
Let's just say they were selling. There's 100 million, and they're selling 100,000. Well, that's 100,000 shares that have been pulled away from the 100 million, right? That 100,000 pulls out day one. Let's just say it's day one, and it sells. And as it does, it's mostly buy orders, right? It's more buys. So that price.
But he just said that this was selling. Okay, so we have a float of 100 million. For some reason, it says 100,000. Whatever, 100 million, and on day one, 100,000 shares are sold, but they're mostly buy orders. Okay.
Started out at $1 a
All right.
share.
This is
Day one,
important.
let's just say it's day one, and it sells, and as it does, it's mostly buy orders, right? It's more buys.
I mean, a trade is a buy and a sell. Every trade is a buy and a sell. Like that's something that they have to understand. Every trade contains a buy and a sell. And which one, buy or sell, it gets reported as. Now that's a question that I've seen people ask. How is it determined whether it's a buy or sell order? If there's a buy and a sell on every executed trade, we'll get to that. We'll get to that.
So that price, started out at $1 a share, and because of that, pulling it out for the day in the amount of sells and buys, maybe it went up to like $1.05, right?
Okay, so it started out at $1. 100,000 shares get pulled out, and the price goes. I'm just going to continue. I mean, I watched this last night twice, and I'm still really trying to understand what the hell he's saying.
The original price, $1.05, right? But the original price of this entire float was $1. That was the original value of it. But
the original value of the float? So like the IPO price? I guess is what he's referring to.
Of this entire float was $1. That was the original value of it. But that next day, it was able to close.
Well, the value is decided by buyers and sellers. So there is no original value. I mean, there's a starting, I guess an IPO price. That's what it. But even that is, how is that determined? So the original value
above $1.05, and that's pulling a certain amount away, right? But then on day two, it's 50K shares, right? And it's mostly sell orders. So now that pull, that weight starts to pull that 100,000 back down to 98. But again, that's not the true price of the entire shares, unless there's enough of it being.
Oh, okay. So yeah, so the shares exist in a library, let's say, and each day people withdraw shares from the library like they were checking out books. And that's not how it works. But so I I think he's implying here that the entire float is not affected by the the entire 100 million here is not affected by the 100,000 that are trading. So that price only affects the price that's arrived at with the trading of those 100,000 shares is only effective on those shares. I don't know. Does it sound like that's what he's saying?
Traded over and over and over, so you get these very, very high volume days. And if you turn over, that's 100 million, but let's say 150 million shares somehow another turns over in the same day, whatever that price is, it literally just pulled that entire float up to that level instead of just portions of it on a daily.
So okay, so I think that's what he means. So he's saying that if you have 100 million shares total in the float, and on a particular day there are 150 million shares traded, so the entire float's traded, the entire float, and then another half of it are traded. So multiple shares were traded multiple times, which is totally legitimate. It's not an indication of anything other than high demand. But in that case, then you have the entire float that's affected by those changes. Okay.
daily basis. And it's always, the way I saw it, it's always going to pull the price back to what that entire big float was based on.
It's always going to pull the
portions of it on a daily basis. And it's always, the way I saw it, it's always going to pull the price back to what that entire big float was based on.
It's going to pull it back to what the entire big float was based on. So he's saying that, okay, the original price, whatever that means, was $1, and it's wanting to be pulled back to $1. If fewer shares are trading, then there's relatively less energy to make the price move up or down, and stick. In other words, so it's less likely to go up and stay up or go down and stay down, I think he says.
If it started out at $1, until it starts to transition and continues to pull it to where the entire float now can get to $1.05, worth $1.05, right? The market value with the ups and downs, depending on how many sell orders they got or how many buy orders. So that's what I envision. Just this, I keep seeing this like pulling off effect. You know, it's pulling a portion of it away from
pulling our brains apart.
If that makes sense. I'm trying to share from the way I'm hearing it. And so you keep that pressure going, and if there's a lot more buy orders, and it's 100 million, but it's 20 million shares.
Okay, again, every trade is a buy and a sell, so there can't really be more buy orders than sell orders. Well, I mean, there could be more orders, but there's not going to be more transactions. So a transaction is both. Period. There can't be more sell transactions than buy transactions, because each transaction includes both. That's how a trade happens. But there are attributes about those orders that can make them more exerting of pressure to the up or down, and we'll get to that too when we talk about the real way that it is. But anyway, but you hear people say that a lot. There's more buys than sells. Strictly speaking, not really.
Shares a day, that's a slow pull. You're not going to see that price go up. But let's say you have a 20 million float instead of 100 million. Now you've got even smaller of a float with a higher price. Obviously, the smaller the float, ideally the price would be a lot higher. And in the event that happens, so if you only got 20 million as a float, but you're selling 15 million a day or 10 million a day, you're going to turn that float over a whole lot faster, which can now start to pivot the price up. So I can see that point when I think of it that way. The lower the float, the faster that price can be manipulated up with the buying, and especially if shorts are covering. So I kind of see that point too. That's what my brain perceives. But when you got a huge float, and let's say your float is 1.4 billion, for example, or your float is 1 billion, and that was the same. Why did I do that? Your float is 1 billion, but you're only turning 24 million shares a day, or 50 million or 70 million shares, if you're even that high. You're not really pulling that price, right? You're just nicking away at it, and then the overall original price of what the market said it was worth on all the shares dilutes it back down, right?
No. So yeah, so it is the way that I thought he's saying what I thought he was saying, which is, oh man, oh Jesus. Okay, so this is pivotal here for his understanding, for whatever understanding.
70 million shares, if you're even that million. And
all right, Jorge, we'll see you later.
Your float
Thanks
is
for
1 billion,
subscribing.
you're only turning 24 million shares a day, or 50 million or 70 million.
I mean, and this is easy enough to show just by looking at actual charts or prices and volumes. Like, does the actual evidence, does the market validate this? That would be, even if somebody knew nothing about this and couldn't judge whether he was right or wrong based on what he's saying. You could It makes perfect sense if you don't think about it. Right, right. Unfortunately, I can't do that. But, um, you know, could you see this theory in the actual like evidence in terms of the charts? Does it make sense that way? I don't know.
shares,
Well,
if
I
you're even
know.
that high,
I do know.
you're not really
But I would start there
pulling
if I
that
didn't know.
price, right? You're just nicking away at it, and then the overall original price of what the market said it was worth on all the shares dilutes it back down, right? Until you get enough
Oh man, he just threw the term dilute in there. Oh geez. Oh
volume
fuck.
that keeps pulling it. And that's where we see, I think this is probably gets all into the technicals, especially with the algos. But that was just kind of like the beginning
What?
stages for me. I was like, yeah, shit, that kind of makes sense. You got to get that momentum going.
It does?
With those buy orders. And then if they're shorting those, then they're constantly pushing it down. You know what I'm saying? And then there'll be some buys.
Dilution, yeah.
Pushing it down.
Sure is a
Let's say
touchy
those
word.
orders, and this is where it gets in the dark pool.
Hey.
If that's true, those orders aren't hitting the market, so they're not even it. There's only the bigger portion of it that are.
Let me go back.
Float, ideally, the price would be a lot higher. And in the event that happens, so if you only got 20 million as a float, so I can see that point when I think of it that way, the lower the float, the faster that price can be.
I skipped
million,
back.
for example,
Fuck.
or your float is that high. You're not really pulling that price, right? You're just nicking away at it, and then the overall original price of what the market said it was worth on all the shares dilutes it back down, right? Until you get enough volume that keeps pulling it. And that's where we see, I think this is probably gets all into the technicals, especially with the algos. But that was just kind of like the beginning stages for me. I was like, yeah, shit, that kind of makes sense. You got to get that momentum going.
She must be one confused woman. That's all I got to say.
If they're shorting those, then they're constantly pushing it down. You know what I'm saying? And then there'll be some buys, but they can keep pushing it down. And let's say those orders. And this
here's something. Here's something. He said, "Oh, they're shorting it, and so it's going down." I mean, the thing is, even on short sales, who the hell is on the other side of a short sale? So a short sale requires a buyer as well. So it I don't know, like this in my mind, if I were ignorant about this, okay, what he's saying doesn't make sense, but it would spur a lot of questions in my mind. Like just based on what he's saying, it would bring up more questions, more and more and more questions. Like, well, but what about this? How does this? Because doesn't this da da da? So this is what this hopefully this had this reaction. People had this reaction to this video, and it made them actually question things. But I don't think that's the case. But listen to this.
With those buy orders. And then if they're shorting those, then they're constantly pushing it down. You know what I'm saying? And then there'll be some buys, but they can keep pushing it down. And let's say those orders, and this is where it gets in the dark pool, if that's true, those orders aren't hitting the market, so they're not even pulling it. There's only the bigger portion of it that are pulling it downward.
I mean, I guess if you believe that, then
of course you're going to continue to trend, and guess where you're going to trend? You're going to go from $72 all the way down to freaking $4 and $5.
No, Mike.
When there's not enough buying pulling it this way, and there's more of them shorting it down this way.
Okay, so this is an ignorant dichotomy here. Ignorant ape dichotomy number 537. Buying makes the price go up. What makes the price go down? Oh, of course, shorting. That's the only thing that makes the price go down. Yes, of course. Of course. No. there are things called long sales, and there's been a hell of a lot of long selling. So someone who has a long position liquidates that position, or in other words, they sell it. They sell their long position. They bought with the intention of holding it for whatever, but instead now, or just they decided to sell it at a profit or at a loss. I mean, we know which one. But that in some cases would have the potential effect of adding to selling pressure or the price going down, but not always. Just like not all buying has the effect of adding to the pressure of the upward pressure to the stock or the stock price going up. So some transactions really don't affect. Now I'm not talking about dark pool. I am not talking about dark pool. Just based on the price itself, based on the way that the order is, the context of the order, and we'll get more into that. But um, I really can't stand that dichotomy, that false dichotomy of buying makes the price go up, shorting makes the price go down. No, selling, and in fact, it's aggressive selling. Aggressive selling will cause the price to be uh, exerted upon the down direction. Um, just like aggressive buying will do the opposite in the upward direction. But why do they think that? Well, I guess because they believe that none of their people have sold any shares. So if you think that nobody's selling and you believe that foolishly, because people online, wait, what did Ron say up here? Internet never lies. See? So if you believe that, internet never lies, and the internet says nobody's selling, then why is the price going down? Well, the only other thing that there's evidence of is short selling. So shorting must be what's causing it to go down, right? I'm not going to disagree with this. The cat zone. Um, and this video, this could be seen as anyway, anyway,
Um,
maybe we should just all do acid. Then it will make sense, maybe. No, never mind.
mind blowing. I don't know. I could be all wrong. That's just something somebody was trying to explain to me via DMs.
I want to
And
know
I
who
was
was trying to explain
visualize
this
it,
to
and that's how
him.
I visualize it. You got this big chunk of clay, and you pull off a little bit,
No,
and say you're selling it.
no, it's not like the goddamn creation story, okay? This is not God creating woman from the man, from his ribs, okay? That's what he's I feel like that's the analogy. No, it's not clay, it's not a chunk that gets added back.
Up, it's pulling
Oh my
up, but if it's
God.
pulling down, it keeps pulling up that clay. But if that clay's bigger and it's got more shares and it's strong enough,
See, the clay is bigger. It's
it's not
it's
enough.
the
It's going to
man.
pull it back to, and that's, I guess, the trend lines, right? It's going to pull it back to that number
The trend
until there's a
lines.
lot of volume and a
What is a
whole lot of
trend
volume,
line?
which will turn over that price. And that means that price, in my eyes, will stay at that point. If it pulled it higher, it's more than likely to stay there. If the next day it starts to sell off a little bit, that'll pull it back up, and vice versa.
What? Okay, I didn't catch that last night. I did not catch
A lot
this
of
last night.
volume. It's going to pull it back to that number until there's a lot of volume and a whole lot of volume, which will turn over that price. And that means that price, in my eyes, will stay at that point. If it pulled it higher, it's more than likely to stay there. If the next day it starts to sell off a little bit, that'll pull it back up, and vice versa.
The only thing that's going to pull prices up or down is people that are willing to pay more for the stock. Okay, they're willing to pay more and more and more. In other words, they want to buy it at the market price, whatever that is. I don't care if it went up a little bit since I submitted the order. I just want to buy it if there's no shares available at the price that it says when I click buy, whatever the next price is up, I'll take it. I don't care. I just want to buy it. That's aggressive selling. That's market order. I'm sorry, aggressive buying, market order buying. You don't care what the price is. You just want to buy it. That's the only thing. I mean, so, and the opposite for selling, but I mean, and price going down. But there's nothing else exerting, there's no invisible force. There's no fourth dimension where prices are exerted upon by poltergeists or something. There's no like, you know, electromagnetism, but for stock prices. Doesn't work like that.
I don't know. It's just kind of what I was getting out of it. If that makes sense.
So I don't know. I don't know if he's getting out of it what was intended to be. So if the other person that told him this was just full of shit or trying to confuse him, or if he's misunderstanding what they were saying, but I don't see how that could, I mean, people can misunderstand everything, so it's possible, but I don't know what would have been tried to be explained that would be interpreted this way. I'm not sure. I'm leaning towards if it was an ape, clearly they probably don't know what they're talking about.
It all wrong. But if you know, if it makes sense to you, I'm trying to dumb it down, dummy speak of what I'm thinking.
And I noticed that he said that too. I'm trying to dumb it down, dummy speak, whatever. And the thing is, it really is very simple. This is a very, very simple concept. I'm not saying that because whatever. It really is. It really is. And everybody interacts with other systems or other areas of life and the world that operate in similar ways. So it's not like now there's not much that's exactly the same, but the concepts that are kind of put together, we deal with every day almost in different ways.
It's a
Wow.
military thing, so don't take offense to that. It's just a statement,
None taken.
Dumb it down. Keep it simple, stupid.
Try not to suck.
But it totally makes sense to me.
Do simple better.
Thanks, guys.
Okay. So I hope that you're not too confused, Cat Zone. Or is Cat and Cat Zone the same person? I don't know. But so, and unless I get any positive or negative confirmation on that, I'll differentiate the names. But okay, so where to start with this? At the end of the day, um, this is completely wrong. It's just completely wrong. And I don't know where this originated, so I don't know who to, lash out at. So I'm just not going to. I'm just going to say that's wrong. And that's making it way more complicated than it actually is. Way more complicated than it is. So I'm going to pull up some stuff here. Um, we'll go over it a little bit, and maybe people will find this section of this stream or maybe not. And if it's not if it's not helpful, whatever, just tell me to move on to the next video. But I feel like this really needs to be clarified because it's kind of important, even though it's not really. So it is important because if your entire understanding is based on like a flawed conception of it, then you might think that you should do something else or you should do this thing as opposed to that thing because this thing is going to go towards the objective that you want to achieve, whereas that thing is not. So that's a reason. But it also doesn't really matter because I can tell you nobody's really thinking about this. I don't think. I mean, I'll ask Ron is a profitable trader. Model 3 dude is a profitable trader. We have profitable traders here. And I would ask myself, but I'm not down to talk to myself. Uh, even though But um, you know, is this something that people actually, need to like recall and use on a daily basis in terms of like when they're actually doing it? No, I don't think so. And I certainly don't. But at the same time, it's an understanding of let's say you didn't understand how eBay worked. Okay. Most people are familiar with eBay. They're familiar with the way it works, more or less. There might be some confusion as to the very, like there's stuff that you can look at that it's not really visible, like the bids, all the bids on an item, for example. But at the end of the day, it's pretty clear what happens. I want to sell this item. Okay. I want to sell this AMC NFT on eBay. And I'm saying that I want to start the bidding at a certain price, and for him, that's that uh, original price, which is irrelevant except at the beginning. That the only time it matters is at the beginning because that's where it starts. Um, so I want to sell this NFT. I'm going to start the bidding at 1 cent. Okay, that doesn't mean it's worth 1 cent. That means that's where I'm starting the auction, essentially. Okay, and then people come in. They look at it and they kick the tires and they say, "Yes, I want this. No, I don't. How bad do I want it?" Okay? If there's already bidding happening, okay, you know what the high bid is. If you want it, if you really want it, you can bid more than that, okay? And maybe you will become the high bidder, and then at the end of the period, which whatever it is, 7 days, 3 days, 5 days, a week, um, the auction closes and whoever has said that they will pay the most money for that item, for that NFT, uh, they're the ones that then the trade happens. And the person who said, "Yes, I'll pay 5 cents for it," and that's the high bid, then the seller, under most circumstances, is obligated to sell the item at the high bid to the high bidder. And of course, there's, all of eBay's rules and policies and all that, and they take a cut, of course. But essentially, that's how it works. And so you have multiple people that are bidding on an item. Everybody wants this item. So in this case, we're talking about like, uh, something that people actually want, as opposed to the other example. Um, whatever the item is, a graphics card or something. Um, you have potentially thousands of people looking at that item, making a decision. Okay, what is it worth to me? What am I willing to pay for it? And then, if that's really something that they're motivated to try to acquire, they're going to enter a price. The way it works on eBay, you basically you put in highest price that you're willing to pay, and then it will kind of increment it. That's kind of like the eBay policies, the actual like behind the scenes part of it. But for this analogy, we don't really even need to worry about that. You put in what you're willing to pay for it, and if you are willing to pay the most, because the buyer wants to, I'm sorry, the seller, they want to get the most money that they can for it. Buyers, ultimately, at the end of the day, they want to pay the lowest price possible, but they're also willing to pay maybe more because it has perceived value to them. They need it for work, whatever the reason, doesn't matter. Doesn't matter. Um, they're aggressive. So they enter a higher price, higher than what other people have entered, what they're willing to pay, and so the item gets sold to the highest bidder. I think that's pretty straightforward. And really, at the end of the day, the stock market is not that much different. It really isn't that much different. So I'm going to try to find an illustration here that will make this a little hopefully clearer. So I mean, it really doesn't even matter. We could just pull up any old. I mean, I could just pull up thinkorswim probably and just look at something here. Let me do that. Although it's not really that populated. Let me go with let me pull up Fidelity, but we're talking about the limit order book here essentially, and I've talked about this before. We've gone over it before. But let's see. Come on. What does Fidelity call it? It's okay. Okay. All right, so um here's the order book on Fidelity Active Trader Pro. Okay. It doesn't even matter what this is, although it looks like it was SPY at some point. Um and yeah, so you know, we have bids, we have asks, and that's left two sections, and then over here on the right we have the actual transactions. So on the left, um, you know, you have the bid price. Okay, so that's the price that you could sell the stock at immediately as the seller. Okay, I want to sell it. Somebody is out there willing to pay 445.76. They're willing to pay that much. They have a bid at 445.76. So they're ready to buy 300 shares at 445.76. They're sitting there waiting. They're just waiting for somebody to come along and say, "Hey, yeah, I'll sell it to you at that." Um, and then on the other side, you have the ask. So you have people offering um, to sell you something. So as the buyer, you want to buy the stock immediately. You're going to pay the ask price, and so these prices are slightly different because you can't buy something and then turn around and sell it for the same price. This is the spread, so it's 1 cent wide. So if you buy it for 445.77 and turn around and sell it for 445.76, you just lost a penny. That's how it works. And so this is the list of what people are willing to sell the stock on the right to you for. And so notice that these prices go up as you go down. As you go down, these prices go up. And on the bid side, these prices go down as you go down the list. Okay. So why is that? We'll come back to this. Okay. So as it stands right now, you got a 445.77 ask, 445.76 bid. And that's the state of the market right there. So nothing is happening right now. Well, clearly, because it's just an image, and this would be running, you'd see transactions stack up on there like, a receipt showing you. But let's just say, for the sake of this demonstration, explanation, discussion, whatever, that this is where we are right now. And um, we can see here that, you have 445.77, 445.76. Okay. If these if somebody comes into the market and says, "Hey, I want to buy, you know, 200 shares of this security, but I don't want to pay, um, you know, I need somebody to sell it to me for less than." You see where I'm going? Or, I want to buy it, but I don't want to pay that much. Or I want to sell it, but I don't want to get that little. I want to get more than what it's selling for right now. Okay. That's where these other entries come from. And of course, if you're selling something, you want to get the most you can for it. So this is why we see the ask side go up as you go down the list, because people are saying, no, I'm not going to sell it at 445.77. Are you crazy? I'm selling it at 445.78 and 445.79 and 80 and 81. No, I'm selling it at 445.83. Okay. So they've already said this is the lowest that I'm willing to accept. This is the lowest price that I'm willing to take on this. And they go ahead and submit that, and it sits there in this order book, literally a book of orders, so that when some other person comes into the market and says, okay, I'm thinking about buying this, and they're flipping through the book, so to speak, and they're looking at, okay, what do sellers want for this? And what are buyers bidding at? Because buyers want to get the lowest price. So these prices go down as you go down this list because I want to buy it at 445.75. Well, you're crazy. It's not worth a penny more than 445.72. Okay. So in that sense, what you're seeing here is, you know, um, orders that have been submitted, limit orders that have been submitted that are waiting to be matched with some other order that comes in that is in a price that's, acceptable to that trader, to that participant. So, um, and this is how it goes. So if I come in and I say, all right, I want to buy, let's see, what do we got here? 1,062, 12, 15, 17. Let's just say that all these add up to, 1,900 shares, okay, on the ask side at 445.77. Okay, and I come in as an investor and a high roller. 𝓻𝓪𝓷𝓭𝓪𝓮 comes into the market and he says, you know what? I need to buy 1,900 shares of SPY right now on a market order. I'm going to submit a market buy order for 1,900 shares on SPY, and the current ask price is 445.77. Okay, so in this case, this is an aggressive buy order. It's aggressive because I'm saying I don't care what the price is. Now, it just so happens that Trey is buying all of the shares that are available to buy at 445.77. So that transaction occurs, and imagine this over here on the right, that the receipt, well, these are sell orders, but uh, let's imagine that it says 445.77 and it's green and it says 1,900 shares. And so that's Trey's buy order. Then Scott Allen comes along after him, sloppy seconds, and says, you know what? Trey's doing it. I'm going to do it. I'm going to buy maybe not 1,900 shares because I didn't make millions trading AMC options, but I'll buy, I don't know, I'll buy 200 shares, SPY. Okay, so I come in here and I'm looking at and I see, oh, Trey says he just bought 1,900 shares at 445.77. I can buy 200 shares at 445.77. That'll work. So I pull up the thing, I look at it, and it says, what pop quiz, what does the price say? Assuming no new limit orders, nobody drops out of their cancels their orders, nobody adds any orders. What does the price indicate for me? What can I buy the stock at? And the answer is 445.78. 445.78. Why? Because Trey or whoever bought all of the shares that someone was willing to sell it to me at 445.77. So there's no more shares available at that price. That is demand in action. That's supply and demand in action. And the apes like to say, Oh, well, if supply and demand was in control, it would be totally different. And no, I know. Look, they have no clue. We saw that. We saw this with this.
Rules out.
And I'm not using this to stand for all apes, but I kind of am. Because I bet if there are 4 million apes, there are 4 million different understandings of how this works. And that's wrong. There are objective facts. There are ways that things are, and it's on us to know them, learn them, figure them out, not how we think it works, but how it works, which is either objectively right or wrong. And then, and only then, can somebody, in my opinion, then and only then should someone, I mean, no, just because you understand it doesn't mean you should try to explain it to people because not everybody who understands things can explain things. But certainly it's a requirement, okay, that if you are going to be that type of figure, that you really need to know that you know. If you don't know that you don't know, I really don't know what to say because then you don't know. But you don't know that you don't know, and you're misleading people because you don't know, they don't know, nobody knows. It's the blind leading the retarded and dumb and deaf. Okay. So I think it's important. Um, but getting back to this here, oops, no, getting back to this. This is how prices move. Another way you could think about it, like, well, because the prices on eBay are fixed. Well, for like buy it now stuff, that's totally different. Um, yeah. Hey, I have these I have this honey that I bought from one of my neighbors, one of my old neighbors. And he had bees. He had beehives, bee whatevers. And um, he had honey and he actually just gave it to me. But I mean, for the sake of this argument, say the honey comes at a certain time of year and at that time of year there's a lot, but as the time goes on, he gives a lot of it away. He sells some of it at the farmers market. There's less left. So doesn't it make sense that, okay, if you're going to sell something and there's fewer of it left, buyers should pay a premium for that because there's not as much. So this is the higher bidders coming in the eBay auction, like, ooh, I need that. I need that honey. I'm willing to pay $5 more. Some people aren't, but he's already sold all the honey that was cheap. Now we have left is the stuff like the reserve quantity that's like, yeah, when it gets down to this, you're going to pay more because this is all I've got left and I want some too. So the thing about the stock market is that this is for buying, what we just talked about buying, but it happens for selling too. So sellers are also participating in this process. And then it's the opposite, essentially. And so what we're talking about is we're talking about auction theory. And this is how the market works. This is how our market works. It's an auction market. And it doesn't seem like an auction, maybe to a lot of people, because there's no auctioneer. It happens on the computer. Um, there's no physical product. We're trading stocks or securities, options, these weird things that exist, but they don't really exist. And they're worth a lot of money, but they're also not worth anything. So I understand that it can be a little confusing, but I mean, this is the concept. We're talking about conceptual things here. So buyers enter competitive bids and sellers submit competitive offers at the same time. At the same time. The price at which a stock trades represents the highest price that a buyer is willing to pay and the lowest price that a seller is willing to accept. That's saying the same thing I said just much more succinct. The price that a stock trades at, it's the highest price that a buyer is willing to pay and simultaneously the lowest price that a seller is willing to accept. The highest price that a buyer is willing to pay and the lowest price that a seller is willing to accept. You can see that right here, right? Highest price, the lowest price. Remember how they go in opposite directions. Matching bids and offers. So when we say offer, we're saying ask. Same thing. Bid is bid. Ask can be ask or offer. So matching bids and offers are then paired together and the orders are executed. So this is why we say that there is, for every buyer, there's a seller. For every seller, there's a buyer. Every transaction has two sides. So you can't sell something if nobody's willing to buy it. And you can't buy something if nobody's willing to sell it. That's what we mean. The New York Stock Exchange is an example of an auction market. Okay. The process involved in an auction market differs from the process in an over-the-counter market. On the NYSE, there are no direct negotiations between individual buyers and sellers, while negotiations occur in OTC trades. So this is less relevant here, but essentially you have to go through the market itself. You have to go through the institution of the market. You can't go directly to, whoever. So Ron can't sit there and say, okay, I want to buy these shares from Scott, but I want to wheel and deal. So I'm going to call up Scott and we're going to have a negotiation, good old fashioned haggling session. You can't do that. Okay. So everything goes through the market. You don't know who you're buying, the shares that you're buying comes from. So it comes from somebody who's willing to pay or to accept the price that you're willing to pay or accept. Most traditional auctions involve multiple buyers, multiple potential buyers or bidders, but only a single seller. Okay, so this is we're talking about eBay style auctions. One seller, multiple people want it. And yes, hit the like button. Take Model 3 dude's advice here. So in the eBay model, you have one seller and you have a lot of people trying to buy it. And whoever is the highest bidder, they get to buy it. They get the pleasure of buying that AMC NFT. But auction markets for securities, and this is why I said you have both sides, multiple buyers and multiple sellers, all looking to make deals simultaneously. So you got sellers who want to get the most, and you have buyers who want to pay the least, and it's all happening all at the same time. And it's a spectacular, um, marvel of economics, I guess. Supply and demand. Okay. So to expound a little bit more, we're talking about a double auction. So that's what we mean by double auction. Buyers and sellers submit prices that they deem acceptable to a list. That's the order book we looked at here. When a match between a buyer's price and a seller's asking price is found, the trade proceeds at that price. Trades without matches will not be executed. So that's what we see here, all these orders that are waiting to be executed once a price comes along that will match with it. Examples, 4 buyers want to buy a share of company XYZ and make the following bids: 10, 10.02, 10.03, 10.06, respectively. Conversely, 4 sellers wish to sell shares of XYZ and they submitted offers to sell the shares at the following prices: 10.06, 10.09, 10.12, and 10.13. In this scenario, the individuals that make bids/offers for company XYZ at 10.06 will have their orders executed. All remaining orders will not immediately be executed, and the current price of the company XYZ will be 10:06, and that's assuming that there's more shares available. We don't know how many shares are available. By the way, that's what's meant by bid size and ask size, talking about how many shares is somebody putting up at this price. In this scenario, we already did treasury auctions, and that's it. Okay, so we have a double auction. And if you've ever been to an auction, a live auction, uh, like an estate auction or anything like that, livestock auctions, this is the eBay style of auction or English style auction, where you have bidders who are calling out their bids, an open outcry, um, or raising their hand or their number. This is what you see in the movies and stuff like that. This is what most people think of when they think of an auction, at least in the United States. And it's also an exciting type of event, where you have this competitive nature of somebody who really, you know, you have all varying degrees of competitiveness, varying degrees of aggressiveness. Um, or art auctions. Art auctions. I'll never forget the art auction where Banksy was selling the the um the painting that shredded itself, and immediately after it was sold for an ungodly sum, the thing shredded itself. Fantastic. Amazing, amazing moment in in the high society of the art auction world, but um that's what you're dealing with. In the double auction and the security auctions, um, it's the same concept, but instead of just buyers competing, and in the old days, you would have open outcry. You would have people shouting out what they're willing to buy for or sell for, and it would be what their client would be uh, comfortable buying or selling for. So brokers um, would do this for their clients who are at home without a computer because it's the 760 50 whatever, and they called in and they said, okay, what's the price of Sears again? What'd you say the price was of Sears again? And and then they tell you because there's somebody literally on the exchange floor looking at the board saying, "Oh, yeah, Sears is 6 and 7/8, 6 and 7/8 because they used to use the fractions." And you say, "Oh, okay. You know what? I'll buy 100 shares at 6.5." Okay. Well, it's going to, maybe, maybe not. Is somebody willing to sell it at that price? Right now, the best price that you can get is 6 and 7/8. And then and so on, and it would happen that way, and then the broker would go and actually do that transaction face to face with, or in person at least, maybe across a hall, or across a room, or the back of a line, but that's what would happen, um on both sides. So there's a great, I mean, the Wikipedia entry is good. I'm not going to read it and really go more into detail here, but this is all modelable. It's all able to be modeled by mathematics, which is interesting to me. And in terms of, how could this be not only modeled but simulated? I want a simulation of this in terms of a mock up of this, and it exists. Don't don't worry. I'm working on it. There are a couple double auction model simulations out there that mainly have been developed by like academic researchers who are studying different aspects of markets. But it's like a GitHub thing. It's like something you get from GitHub, and it runs in Java or Python or something. And so I'm working on getting something like that going, because I think it will be even more illustrative of how this works. And then we can model scenarios too, where, okay, what happens if you have a big buyer come in and how does that affect, the order book? Well, these shares get executed and then these move up and these move down. It'll be fascinating to see. So stick around for that at some point. Um, but getting back to this, um, we just went through basically how it works. Um, this notion of the float, I really think and hope and want the apes to stop worrying about floats. Stop worrying about the goddamn float. Okay. The float is less important than you think it is. And you're not going to corner the market. You're not going to corner the market. So stop worrying about the fucking float and worry about the price that you buy at or sell at and worry about completing trades. I mean, this is not advice at all. Not that I'm concerned at all about it, but uh, you know, you know that we don't minister to the apes here. This is not what this is about. It's about correcting this misinformation. However, in this case, somebody sees this, they're going to get the wrong idea about how it works and what they should do. The only thing that matters, and actually, was it Jorge said this earlier? All I need to understand is buy low, sell high. Buy low, sell high. And I would say, I think you need to know a little bit more, but not much more. Buy low, sell high. It's about the price that you pay, because you think if I buy it at this price in a week, in 2 weeks, in a month, in 5 years, in 10 years, whatever time horizon, I think XYZ stock will do whatever. I think it will go up. If I'm buying low, I want to sell higher. Some people say buy high, sell higher. That's something that I've heard and come across in doing this over the years. Like, I guess the implication is if it's low, who's to say that it'll go up? If it's just low, who's to say it could stay low, it could go lower. But if it's already gone up, if it's already up there and there's a trend and you've established that and you know the context, buy high, sell higher. Okay. But at the end of the day, or buy lower, sell higher. How about that? It doesn't have to be absolute levels, relative levels. Buy lower, sell higher. Or if you're a degenerative bear like me, an unabashed degen bear, not a perma bear, but bear when he needs to be a bear, sell high, sell higher, buy lower. Sell high, buy lower. Just saying. So that's the only thing that matters. I don't give a good goddamn about any of this other shit. And no profitable traders do. Nobody cares what the float is. I don't give what the float is. The float makes no difference. Because at the end of the day, I mean, the market cap. Maybe it makes a difference, low float versus high, huge float. Okay, sure. But at the end of the day, I don't care. Personally, I don't care. I'm not trading anything that's super low price anyway. And truth be told, I'm trading options. So, but the same concepts apply. But the underlying stock, I'm not trading penny stock options. Um, yeah. Do I think this will go up? Is there a good chance? Is there a better chance? Is there a higher probability that's the best way to think about it for me. Where's the risk? Is the risk to the upside? Is the risk to the downside? Is the probability stronger that this will happen or this will happen, or neither, or it will go sideways. Or hey, I don't know if it's going to go way up or way down. I just have a feeling it's going to move in one direction or another. Options are the answer to all of these because you can set up strategies that will profit from all of these outlooks and probabilities. So if you think it'll go higher, if you think it'll go lower, if you think it'll go sideways, if you think it will go in either direction, but not sideways, if it will go to a certain price and basically stay there, whether that's up or down, and all kinds of things. So I'm not shilling for option trading. I mean, most people probably shouldn't trade options, but boy, I'm sure glad that I learned how to trade options. I'll tell you, it really is pretty cool. Um, so at the end of the day, then, um, all of the shares of a stock are affected by price changes. Just other things here that he's putting out there that I don't know if he's really saying, but are at least implied. So you don't take out a certain amount of the float and trade it. Um, all of the shares are affected. So if the price goes up to $1.05, even if you didn't trade your shares that day, but you hold them in your account, guess what? The shares that you have are now worth $1.05. Whatever the original price was, whatever the starting price was, it makes no difference. That's irrelevant, and nobody even knows what that is anyway. I don't even think you could know. Doesn't matter. I mean, yeah, opened at a certain price, but um, the only thing that matters there is who's holding shares that bought it or that has a cost basis of whatever the original price was, and where does it now, just in terms of are they profiting or not, but that's not our concern. Let's see, what else did he say? How does the price go up? It's not because this portion of clay that you pulled out of the original ribs of the man. It's not because that is pushed up and and it makes momentum, whatever. It's it's just simply due to the fact of the orders that come in. Okay, what people are willing to pay, what people are willing to accept, and who comes into the store that day. Who comes into the store and says, "Hey, yeah, I'm willing to buy 1,900 shares at 445.77." Well, guess what? They just cleaned out all of the shares that I had on the 445.77 shelf. Now we're going to have to move up to the 445.78 shelf. This is why the apes buying 5 shares does nothing to the price because you literally have hundreds of shares that somebody's willing to sell at that price. So unless you buy all of them, and even then, probably not. I mean, maybe. Um, but you're going to have more shares get added. You're going to have some go away. This is dynamic. This is always changing. Um, you got to buy more than 5, 10 shares. You got to buy more than 100 shares, you know, a few thousand. Now you're talking about moving the market. But at 445.77 per share, I mean, if Trey can afford that, he made way too much money. But yeah, and consequently the same thing for selling. So if you come in and sell and say, "Hey, I want to," well, I mean, it depends on which perspective we're looking at it here, right? But one other thing that I mentioned that I would mention it, so I'm going to mention it. How do we know if this is a buy or a sell transaction? Over here on the right, and I'm not talking about the red and green. Just ignore that. I'm just saying, you know, if there's a buyer and a seller for each transaction, then why do we call some of them buys and some of them sells when there is one on each side? And shares only get counted once in these transactions. So the volume data is accurate in that somebody there was an order executed for 12 shares here, and there was somebody on the buy side, somebody on the sell side. There was a total of 12 shares. We only count that 12 shares once though. So the question is, how do we know which side it gets attributed to? And the answer there is, I mean, people might know this or maybe could figure it out, but who was the aggressor? In other words, there was an order that was standing already on the books. Somebody said, "Hey, I'll sell you shares for 445.77." Right? That is a limit order that's already there. Somebody comes in and says, "Yeah, you know what? I'll buy those." And they come in with a buy order. Maybe it's an aggressive market buy order, and they say, "Yeah, I'll take 200 shares at the market price." That's going to be a buy. That's going to be a buy order because the seller was ready, waiting there at their counter, so to speak, with the shares already there, waiting for somebody to come around and say, "Hey, I'm gonna snatch those." And the person who came in, the aggressive party, was the buyer. So that would be a buy transaction. And opposite, backwards, inverse, upside down for the seller, for the other side. So you have people, saying, "Hey, you know, I'll take those shares off your hand for 445.76. I'll take up 300 of them if you got them. But until then, I'm just going to chill out here." And then you come along and say, "You know what? Fuck this stock. I want out. I want out. I don't care. Just want to be done with it. I don't want the headache. I got 300 shares. 445.76 right here. Boom. There you have a sell transaction." And it's that simple. It's really that simple. Um, so probably God help this guy, really, and anybody who is this confused. Um, this is why it's very important. This is why it's very, very, very important for people to vet information. And I'm not talking about vet as in, yeah, yeah, oh yeah, Scott, we vetted it. He's a vet. No, it's important to evaluate sources. It's important to find multiple sources. It's important to look for authoritative sources, not some guy on Reddit or some guy on Twitter who's trying to explain something to you in DMs. And there are a lot of people who are ready to do that, to explain shit to people in DMs. This is the internet. It's a it's a double-edged sword because there are idiots on Twitter who are ready to explain everything to you in DMs, who are so full of shit. And they might know they're full of shit. They might not know that they're full of shit. But at the end of the day, objectively, they're wrong about things. They're full of shit. Um, those people exist on the internet, and good information exists on the internet. So it's a double-edged sword. You can get thrown under the bus. I don't like that phrase here. You can throw yourself under the bus and totally screw yourself. Or you can learn. You can educate yourself beyond, what somebody who has 3 degrees might be able to do because you're motivated to do it and you're finding the quality information, you're seeking out the quality sources. That's the amazing part, is that all of this shit is on here. I didn't learn this in school. Most of the people here didn't learn this in school, certainly not in high school. And I took one economics class in college and I nearly failed it because I didn't care. I didn't know. I didn't know. I wasn't engaged. I didn't care. I didn't see. And this is also the early 2000s. It's not what it is now in terms of, well, everybody has Robinhood. But my only point here is with this is it comes down to your motivation, your willingness to like put in the time. And at least for me, I didn't, and I still don't really get a lot of sleep. But when I was getting heavy into this stuff, you know, I would s- I would just stay up way, way, way too late reading and trying to discover and clicking on things from one to the next and going down these rabbit holes. I think that's really the best way to do it. For me, it was. And I can stay centered on a topic long enough, to get something out of it and to see the value in it and then be willing to invest more time. But this nonsense about let's find somebody on Twitter, on Reddit, let's look it up on Reddit, let's listen to some dude, some guy like Donahue George or Thomas James. And I want to look at Thomas James's video because I watched it on the way home from work and I literally almost did some stupid shit. Uh, but um, it, and in a way, you know, I don't want to say I'm sympathetic, but I can see how people would be fooled by these clowns initially. But after a while of them being wrong and not making sense, and somebody else saying, look, just think about it. Think about this aspect of it. Wouldn't you question it? And I have to say, I would. I absolutely would question it. And I would abandon it pretty quickly. I don't know why that's not happening here. I think there's too many emotions involved. I don't know. But anyway, that's how the stock market works. It's supply and demand at its most elemental version. And the apes who sit there and say it's not based on supply and demand and whatever else, they don't understand this. They have not gone to this detail, and you can go in more detail, but they have not taken the time to understand how the auction market works. And that's really what you're dealing with here. It's just an auction. It's simpler than the Marine could ever imagine it would be. People want to think that it's complicated, I think, on some level, because maybe that gives it some kind of mystique or if I understand it then it must be really simple and dumb and if I understand it there's no way I could make a lot of money doing it. Well, that you're limiting yourself with those thoughts. uh Oftentimes the most powerful things are the simplest things. And yes, there is complexity in the market, but it's not because of the underlying principle of the way that buyers and sellers come together and say, "Hey, I'm willing to pay this. You're willing to. I'm willing to pay this. You're willing to accept this. Let's make a deal. All right, you got a deal." That's how it works. Simple as that. Simple as that. Okay. With that, let's move on. And I don't have too much more time. Now, um, I see that Jorge's asking questions about war. I have no idea. And quite frankly, don't take this the wrong way, but I don't really care. I know that sounds terrible. I know that sounds terrible, and it sounds like I am a bad citizen of the world. I'm a bad global citizen, but I don't know. Now, if I had to say, do you think markets will crash due to a World War III, or should I ask, do you think there will be a World War III? I don't know. Um, and am I and let me go back because, of course, you know, he doesn't care. So then why are you? Um, I'm not going to sit here and worry about that. I'm just not. That's what I mean by that. Of course, it would impact everything and everybody. Okay. And yes, I would care. And yes, I do not want that to happen. But right now, is it relevant to me? Does it matter? Does it impact things? I don't think so. So in that sense, it's off the radar. That's on another page further down that I'm not looking at right now. That's what I mean. So I haven't really thought about it, to be honest. Um, but my knee-jerk reaction says no, there won't be. But I can't base that on anything. I can base that on nothing except a knee-jerk reaction and intuition, which is sometimes right, sometimes wrong. Um, my intuition also tells me that if there were a crash, or I'm sorry, if there were a World War III, would there be a crash? Probably there would be some type of dip, but you'd probably see something like the COVID phenomenon, something like it, not exactly the same. Um, because you know, the whole monetary focus would change, everything would change, and then also that's like we would go into a different mode. That's the like respectable like suit and tie answer. The you know, um, former stoner, musician guy who's streaming, you know, after work on a Tuesday, the regular, just like off the cuff, disrespectful asshole answer is the market would expect you to think that it would crash, and that's the reason why it wouldn't crash. You see what I'm saying? You think it would crash, so it won't crash. You think that, and I'm saying you, I don't mean Jorge, I'm saying you, the investor, we the we the investors. Dave Lauer. No, he knows this kind of stuff. I'm fairly certain. Um, Ken Fisher, not Ken Griffin. Ken Fisher says that false fears are always bullish. They're always bullish. That's what he says, based on 50 plus years being in the market. So just be careful with that kind of thinking, I think. I think, because this is the kind of thing, and I see that Jorge also said markets function on news. Well, um, sometimes, but sometimes not. Let's say that there's a major, and this happened around the beginning of 2022. I think there was a plane crash. Well, there's always plane crashes, but there was a plane crash. It was a Boeing plane. It went down somewhere. Some number of people died, and then it was a tragedy. And I'm not minimizing that, but I'm not discussing that. That's the event. That was the event. Okay. The company that made the airplane was a publicly traded company, Boeing. And you have, uh, some traders in the market who think that this will make Boeing's stock price go down. So they short it or buy puts on that company. And what ended up happening? Actually, Boeing rallied. The price of Boeing went up. And so there's a couple things at work here. One is like and this isn't so relevant to this example, but like the saying is buy the rumor, sell the news. So this is pre-news, rumors. That's when speculation occurs. When the actual news comes out, it's underwhelming and you dump it. Okay, that's the first thing. Second thing is, and probably more relevant, is that the market is looking forward. The market is looking at the future, not at right now. And that's something that is hard to wrap your head around because we're talking about a price right now, but it's also a future price, um, sort of rolled back to now. So, like, if you see what I mean. So, um, in the AMC example or whatever, in the failing, in the 100-year-old, you know, company that's probably uh, had its best days behind it in terms of innovating and being a cultural relevant icon, culturally relevant. Um, in terms of, like part of the American zeitgeist, let's say. Um, you know, investors now would be seen as, the price now would reflect a lack of optimism for the future of AMC's business. Or flipped around, uh, Boeing's stock price rising right now would indicate traders are viewing that company with optimism for the future. Um, and so they're pricing that into the stock now. So news it doesn't really affect stocks in terms of the way that we think that they would. I'm not saying that they don't. I'm not saying that news doesn't, but it's not um, necessarily a one-to-one correlation like that. So that those are the two things I would say. But, you know, I'm telling you, don't trust me. Okay, this is the difference between me and these clowns. Don't trust me. Do not listen to what I'm saying and just accept it as the truth. Go look it up. Go look at some charts. Look at events. Look at the companies associated with them. Verify it. That's what I would say. Don't listen to me. I don't know what I'm talking about. I'll tell you that. I don't know what I'm talking about. However, I've looked at, I've read, and this is what I found. You may find something different based on what you choose to read or look at. But that's my experience. And Model 3 dude I think he's correct. War is not an option for the world. No economy would survive. We're not in a World War II type of society anymore. I mean, look at what's happening. I don't want to get too into that, but it's fairly isolated, which, I mean, there's arguments, I guess, on both sides of whether it should be or shouldn't be at this point after over a year. It's kind of ridiculous a little bit that it's, still going on or whatever. And of course I care. So, I just like the shock value of saying I don't care if there's a war and we all die. Um, Go ahead, drop that nuke. But we are in a very integrated economy. It's a global economy. And Model 3 dude saying each economy relies on the other is just so true, so spot on. Each economy relies on the other in ways that we probably can't appreciate fully. Um, Maybe we can a little bit more because of COVID. That illuminated a lot of these things for a lot of people where we just expect things to be a certain way. And that's cool, that there's nothing wrong with that. And that the way they are, they are the way they are because you know, that's the way it has come to be. Um, but when one part of it gets disrupted, when multiple parts get disrupted, that really has an effect on things. Um, and not just here, everywhere really. So I think those are good things to keep in mind. Again, I'm just a guy on the internet at the end of the day, and I'm upfront about that. I'm just sitting here talking, sharing my experience and my thoughts, and using the evidence that I have available, and telling people, this is what I'm seeing based on these sources. But go do your own um, investigation on it and see what you come up with. Rumors affect stock. Rumors affect stock. So here we go with the buy the rumor, sell the news. And that's exactly what I'm talking about. So, AMC comes out with or whoever, CMA comes out with, uh, you know, they don't come out with it, but they come out with the announcement like, "Hey, we're gonna have microwave pot pies at the theater." I don't know. And, a bunch of little old ladies come in and they buy AMC stock or CMA stock. They buy it up and they eat through these order book levels and push the price up and up and up and up and up and up and up on the rumor, on the announcement that, oh, hey, did you hear Gladys Bertha Isidore? Did you hear AMC's gonna have pot pies? Well, they eventually they come out and they're tiny and they taste like garbage. Uh, and yeah, Eleanor dumps her CMA shares because, yeah, they came out with them. They suck. So buy the rumor, sell the news. Doesn't that work a lot on Tesla too? Doesn't that tend to happen on Tesla? It happens on a lot of things, pretty much everything, I guess. But anyway, Jorge, though, good questions. I mean, like this is the kind of stuff, and you're just getting my opinion here, so keep that in mind. But it's good discussion. Shit, I am neglecting everything else here. Okay, I'm gonna look at a couple Reddit posts and another video, and then I'm gonna call it a night. I don't want this to be too long. I would like for the market part of the discussion to be accessible for people if they want it to be. AMC true share price after reverse split. Oh, okay. Well, for that, this is on the GME Meltdown subreddit. Thanks, Ron. I love this subreddit. Robinhood commits more exercising out of the money calls by dumb apes. Exercising out of the money calls. Now, you don't have to trade options to understand that this is retarded. Okay? This is dumb, dumb, dumb. I said it 3 times like Adam Aaron. Because they paid 3 times the price for those AMC shares. Robinhood commits contract fraud and won't allow exercise of out of the money Bed Bath and Beyond options. She always does. Goddamn Californians. Oh, what Model 3? What's up, Model 3 dude? Um, yeah, I mean, stream started at like 4 o'clock for these guys, so. Your contract still has a high extrinsic value. Continue. Cancel exercise. I mean, doesn't it? Did it actually not allow them to? Because like this says, why does it say YouTube too? Look at the link above. It's the actual ape talking to customer. Oh, okay. Shit. Sorry about that. Which one is it? Wait, the link in here or this link? No. The support chat. Aha. Got it. Got it. Whoa. Support chat. Which contract are you trying to exercise? That does not matter. Oh my God. Oh my God. What the fuck? It does when it comes to exercising a contract. I'm seeing that some of your contracts are out of the money. I purchased a right to buy shares at that strike price. You cannot restrict me from exercising a contract that I own. That is illegal. All of this will be sent to my lawyer. I can assure you that I'm here to help. Then please fulfill my request. You are unable to exercise an out of the money option contract. It's not true. This would not be economical because, the Robinhood chat associate is making a silly assumption. The absolutely downright absurd assumption that this is about economics. This is not about economics. This is about MOAS. Okay? I wish these fucks, and by fucks here, I mean the green fuck. So far, I got nothing against this Robinhood representative. I wish these fucking assholes, green asshole here, I wish they would say at the beginning of their support chat, I believe that AMC is worth $1 million per share. I just want you to know that. I'm here for a short squeeze. I'm here for the short squeeze. So we all know it right out front, and you can quit wasting these goddamn people's time. That's what they're doing here. They're wasting people's time. And I'm not saying that they're wasting my time, because I do enjoy this, and I do um well, I enjoy it, and I appreciate the opportunity to, like, meet people and, talk about this stuff, because I don't have a lot of friends in real life that are, or I'm not stopping there. I'm just saying I don't have a lot of friends in real life that are into finance. I didn't say I don't have a lot of friends in real life that are into finance, but I don't. So, yeah, just right now, because Robinhood won't let me, I have the money to do so. It doesn't matter. Having the buying power does not mean that the trade would be economical, though. Just an example, would you rather buy something at the store for $1.33 or $1.50? That's none of your business. Please stop giving me finance. Oh my God. You guys have just made such a huge mistake. Tell Kenny thanks. Wow. What a kissy face. I'm going to move our chat over to email and laugh about this with okay, I'll tell the SEC you said that. I'd like a full refund on all premiums. Look at this fucking bullshit. I'd like a full refund on all premiums. Also, I'd like to initiate an account transfer. Also, please give me your full name. What a fucking dick. I hate this person. I hate this person. I but I don't even have to worry about it. They're going to lose everything they put in. It's so great. They're assholes. They're fucking dickheads. They're little bitches. And they're just fucking themselves over even harder. It's so fucking hilarious. It's important to realize that exercising is not economical. Please note that we won't be refunding premiums. You're engaging in fraud as we speak. Then please fulfill my request. What are you seeing in your end when trying to exercise the contract? Yes, it made me contact support and didn't allow me to make the transaction. I screen recorded the whole thing. Now stop wasting my time and remove the restriction before I move ahead and file a formal complaint. Also, this will be viral on Reddit shortly. Yeah, because you're retarded. I'm not trying to waste time. I'm just trying to gather some context on why you're unable to exercise. Which option are you referring to? You're engaging in fraud. Please give me your full name and your supervisor's name. Don't worry, my lawyer will figure it out. You're what an asshole. And it doesn't matter. Allow me to exercise the option. I understand the risk. In fact, it isn't illegal. I don't need your help understanding. I want the ability to manage my own financial destiny. Holy, I don't even think I need to play another video. This is great. Again, you won't be able to exercise. What a dick. Holy shit. Please stop restricting my ability to make decisions for myself. Exercise the contract now. I understand the loss. Do it now. You don't make decisions for me. What is this person, like fucking 16, 12 years old, 8 years old? I paid for the right to buy shares at that price. That's what the premium is. If you cannot refund my premiums, then you have just stolen my money and failed to meet the terms of a written contract. This will escalate to a civil lawsuit if you do not do as I ask. And you already know that I will be filing a formal complaint. Look, they don't have to do fucking shit that you ask. Okay? Honestly, they should close this fucking person's account. They should close this motherfucking person's account and keep the money, but they should close this person's account. They can do, I mean, look at the terms of service. Please acknowledge. I realize that these are self-directed accounts and you're looking to exercise an out-of-the-money contract. Yes, it's self-directed, but they absolutely, and by they here, see, if nothing else, we've all gotten better about saying they, right? Who are we talking about here? Robinhood has the ability, to, if they see, and it's not just Robinhood, it's all brokers. It's in Fidelity's terms of service, customer agreement. If they see that you're trying to make a trade that is absolutely retarded like this, they absolutely can. The broker can absolutely yank it and say, "Whoa, wait a minute here. What is this? We're going to take a look at this, and we're probably not going to let you do this because it makes no sense. And our fiduciary duty," they like to talk about this, is to prevent you from losing all of your money because you don't understand something. Okay? We're here to help you with that so that you can make a better decision. This person is absolutely fucking stupid. And beyond that, the attitude that's evident in these comments, like, tell Kenny thanks. What an asshole. I'd like a full refund on all premiums. What do you think? Yeah, go. These people need to be playing the lottery, not being in the stock market. Jesus Christ. Oh my God. Oh, you know what? Excuse me. Excuse me. This wouldn't be the same. Uh, this would not be a real live stream if we didn't look at least a video by Donnie Numbnuts here.
This is not financial advice. This is not legal advice for entertainment and educational purposes only. Anything I say is my opinion. Please don't make any financial decision based on anything I say in these videos. That being said, hit the like button, subscribe button, all that YouTube algorithm stuff. So you get the videos I put them out, see it. I'm thinking, see, man, analyze that data. Listen, Adam Aaron put out a tweet.
Don't tell me what to do. Don't tell me to listen. You don't make decisions for me. Okay? Look, bald fuck. You don't tell me what to do. Okay? I'll listen if I want to. And if I do, it's not because you told me to. Now exercise my contracts.
That he said that we might be pleased to know that they are aware of the threshold lists and the FTDs. And he said some FTDs, even though I believe there's billions of FTDs, but he said some FTDs, which I felt he was downplaying it. And he said that
Of course you did. Of course you felt like he was downplaying it. If he said, you know what, I think the AMC shares should be $5,000 a share, you're going to think he's downplaying that too, aren't you, Baldy?
contacted FINRA and the New York Stock Exchange. Now, here's the thing. Do I think Adam Aaron hasn't been aware of the FTDs and the naked shorting for the last 2 years? Of course he was. Of course he was. And he kept saying there's no evidence of naked shorting. There's no evidence of fraud and corruption. But somehow
they were
able to short the entire float 100 times the entire float. But somehow...
What are you talking? What? Short the... First of all, speak English. Second of all, what?
Shorting. There's no... He was. And he kept saying there's no evidence of naked shorting. There's no evidence of fraud and corruption. But somehow they were able to short the entire float 100 times the entire float. But
100 times the entire float. 100 times the entire float. Okay, where did we get this one from? 51 billion shares at once. So the short interest is 51.6 whatever. Let's just say 50 billion shares. I mean, if you're saying how were they able to do this, that means that implies that you have some number that tells you this, some indication. But you don't. Now, maybe he's talking about, and this is a completely irrelevant number, the number of shares that have been shorted in total over time, not the number of currently shorted shares. Sorry, she is. Not the current number, but the total, if you add up all of the shares that have been sold short and covered, which is why it's an irrelevant number. Maybe that's 50 billion, but that's irrelevant. That's not current short interest. Wow. Holy fuck. I mean, 1 minute in, 1 fucking minute in, and I've stopped it how many times?
Shorting. There's no evidence of fraud and corruption, but somehow.
Well, technically, that was after the first minute when he says somehow. Okay, somehow. All right. Somehow Donnie was able to discern this number 100 times. How were you able to do that? I'll tell you how the shit that you're saying makes no sense, but I want to know where you got it.
They were able to short the entire float 100 times the entire float, but somehow he saw no evidence of fraud and corruption. The thing is, he didn't want to see it, and only he knows why. I can't go into his head. I can't tell you what he was thinking, but in my opinion, based on the overwhelming evidence of fraud and corruption when it has to do with AMC and GME, there's no way he wasn't aware of it. And that is just my opinion. I'm not saying to buy, hold, or sell AMC based.
Okay. Now, Jorge said up here, I know this chat is all about opinion. I get it. But hopefully, we can start to discern a difference between the way that we approach this and the way that people like this approach it. Okay. That's the danger in this saying, oh, this is just opinion. Well, it is, but it's not just like an off the cuff. Oh, well, yeah. What do you think of the color yellow? Well, I like yellow, but that's just my opinion. This is we try to be educated and inform opinions that are meaningful, opinions that have truth behind them, where you can point to it and legitimately say, look, this is my opinion, but I've looked at the evidence. And here's the evidence that I looked at. And based on that, and even, if you want to get into it, we can get into the page numbers and I'll show you exactly what table I looked at and exactly all that stuff. This is how I'm interpreting this data. So that's an opinion, but it's an educated opinion. That's what we're trying to do. That's what we're trying to advocate for. That's what we're trying to basically say that you need to have in order to be successful here in the market. Unlike, this, I mean, this is, I, I mean, if I were doing this and I said shit like this, I know that the viewers of this channel would immediately scroll, and if not, you should, because this is what I do. Immediately scroll to the description of the video and hit show more and look for the link that goes to the evidence that was mentioned in the video. And if it's not there, bye-bye. That's it. You didn't provide evidence. You said you're citing evidence. You didn't show me. You're not going to provide it for me to go look and see. Yeah, the evidence, it says what he said he thinks it says. I agree. I'm in agreement with that. Okay? But they don't do that. They never do that. They never do it. They don't show you the links. They don't show you the sites. They crop the fucking shit out of websites so you can't see parts of it. It's literally all of the worst things that anybody could do. And the apes have bought into it so deep that I don't, a lot of people can't fathom another way of doing it now. But If I said something like this, scroll to the description and look for a link. And if it's not there, roast me over it. You said this. You said go look it up. You said you had the evidence and you didn't give it to me. Fuck you, Scott. Scott fucking Allen is a dick. I deserve it if that's the case. Because how am I going to sit here and say based on the overwhelming evidence and then not give a single goddamn piece of evidence? That's what a fucking asshole like this does. That is what a fucking dickhead like this does. Motherfucker. Motherfucker. Jorge, Scott, are you a day trader? Yeah, I guess. But I'm not professionally or anything like that. I work a full-time job and I sometimes manage to find time to do some trading. But and I did today, by the way, and it was a good day today. Love that volatility. To the downside. I'm a bear when I need to be. I'm not a pussy bear. I did not, and I will not. Just FYI, bad back knows. Ron probably does. A lot of people capitulated to a bullish outlook. A lot of surprising people did, like Mike Wilson and other analysts are now saying, "Oh yeah, go buy, buy." No, it's not time. We are not out of the fucking woods. We are not out of the woods.
Based on anything I say in these videos.
And that's an opinion, and it is based on data. We talk about it every Sunday on the futures stream. We talk about it throughout the week. You know, and anybody who's been here for any length of time, knows that we're looking at economic data and, a lot of different things. So I can back up that opinion. It's not an opinion that's only held by myself. But you're not going to find a link to that in the description. So sorry. You can go back and watch other streams. Anyway.
Videos. Do it. AMC and GME. There's no way he wasn't aware of it. And that is just my opinion. I'm not saying to buy, hold, or sell AMC based on anything I say in these videos. And here's the thing. He contacted
his fucking lip smacking too. I mean, this guy is fucking gross. This is a fucking gross idiot. Oh my God.
The same FINRA that broke the rules to protect the shorters and screw over the people from MMTLP, screwed them over. So we know that FINRA is not concerned about FTDs and AMC because we saw what they did with MMTLP. And the New York Stock Exchange, the same New York Stock Exchange that's putting out feelers to try to move every single trade to the dog pool, to take every single trade off the lit exchange, the same New York Stock Exchange
Wrong.
that wrote that letter with Citadel.
Why would they do that? I mean, this is so ignorant. This is so fucking ignorant. Why would they? Yes. Okay. The New York Stock Exchange wants to push all volume off of their exchange. They don't want anything on their exchange. Oh, they're still going to have an exchange. They just don't want any volume traded on it. Get the fuck out of here. Yeah, these are the same people who believe that every fucking short seller wants to bankrupt every fucking stock company for every stock that they short. They think that it should go to zero, literally. No, they don't. This is a fucking adolescent at best understanding. I still say you could teach a fifth grader, probably younger. You could teach a fifth grader. You could teach a grade school kid, okay? A grade school kid. The basics of what we talked about earlier with the auction market and buyers and sellers, and buyers want to get a low price and sellers want to get a high price and all that stuff in a simplified form. And they would be better traders by far than any of these clowns. and they'd have more interesting YouTube channels. Unfortunately, you know, that's not going to happen. And we don't want a bunch of kids in the stock market. We found out what happens when that happens with this, the apes. But come on. Come on. Are you kidding me? Yeah, this is old ape narrative from late 2020, early 2021. Yeah, pretty much. And he's not even doing a good job of, like, you know, like, the only people that would understand what the fuck he's talking about are diehard cult members, which is all that's left. The bottom of the barrel in terms of the actual, MOAS believers and the influencers who somehow think that it's still good idea to sit here in front of your fucking curtain and sit here and smack your lips and repeat the same fucking verbal fucking diarrhea that people have been saying for 3 years. Are you kidding me? Are you kidding me? This is what you're fucking doing with your time. This is what you're doing with your time. And people get on me about having a channel, talking about this stuff. Why are you bashing AMC? You're bashing AMC. No, you're bashing it. Oh, really? No. The stuff that we talk about here applies to everything. It applies to any stock. It applies to finance, markets. It is not about AMC. It's 100% not about AMC. I don't give a fuck. I don't give a flying fuck about AMC. I care about liars being held accountable, quality information rising to the top, and people learning how to discern these things. If you can't tell that this guy is an idiot and that the information that he is spewing is complete and utter garbage, then I have failed. But come on, dude. Seriously? What the
Schwab
fuck?
stating that they're concerned about our pension funds. They're concerned about our financial future. They don't care about us. All they care about is not going under.
Guess what, Donnie? What does any fucking business care about? You should know this as a fucking businessman, supposedly. What's your company again? Security something or other? Oh yeah, okay. So security. I'm into security. I'm a security consultant. Sure you are. Sure you are. But that means drug dealer. I'm just gonna put this out there. That's it. That's all I'm gonna say. But, 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 businesses are in business to make money. They provide a service, they provide a product or good in order to make money. Nobody is doing anything out of the goodness of their heart except Scott Allen.
But, and this is just my opinion, I don't believe they can stop it because I believe they got in too deep. Why didn't
yeah?
Adam?
Like you with that. No, I'm not going to go there. I'm not going to go there. Although this is not a family stream.
Aaron and the AMC team contact the Department of Justice. Why didn't they contact the FBI? Because what I see, based on the DD that I've done, that they say we don't do, I see criminal behavior. I see criminal behavior. I see fraud. I see market manipulation.
You don't do it.
I see criminal behavior.
Because you want to see it. He said it before. Adam Aaron didn't see the naked shorts because he didn't want to see it. Well, then why the fuck do you see it? Because you want to. That's why. Because you want to. Or because you think that you can make money spreading this misinformation, propagating it over and over and over and over again without showing a single goddamn fucking piece of evidence. So who's dumber? You for thinking people will believe it, or people for actually believing it? Well, I think the demand probably comes first. Maybe. That's a good chicken or the egg. Which came first, the grifter or the narrative? I don't know. Now we're stuck with both of them. This shit needs to die. It needs to fucking die.
So,
And fucking Wall Street, they love this shit because they're cashing in because these dumb fucks keep dumping money into something that is clearly a loser. It's clearly a loser. I don't care what it is. If you're not making, if you've lost 80 fucking %, why the fuck are you still in it? Why are you still in it? Move the fuck on. Dude, she doesn't want to date you anymore. Why are you on this hounding on her? What do you want to bet? Donnie, just saying.
FINRA, based on their past behavior, is going to do absolutely nothing. The New York Stock Exchange, based on their past behavior, is going to do absolutely nothing.
Of course they're not. You want a fucking handout. Just be honest. You want a motherfucking handout. And I know this guy personally. I don't know him. No. I personally know that this guy wants a handout. Google his name. Look at the lawsuits that he's filed. Before with the AMC grift, guess what? He was trying to get on disability. Yes. You want a handout. That's all you want. You want somebody to just hand you life-changing wealth. Doesn't work like that, pal.
The only hope of any justice might be from the Department of Justice or the FBI. That is just my opinion. I'm not trying to buy, hold, or sell. Anyway, please leave some comments. Tell me what you think. Do you think that FINRA...
You don't want my comments. I'm a new investor. Oh, God. Well, you have ruined your chances. Here's a genuine question. Are there other comparable examples of massive FTD surpassing threshold limit? And in those cases, what did the SEC FINRA do and not do? This could give a general idea of what to expect on that particular issue at hand. Any help will be great. No. No, there aren't. I mean, yeah, there are plenty of stocks that have been on threshold list for a long time. FTDs for a long time. Guess what? Doesn't matter. It makes no difference. No difference. They still want a share count. Look at this. Actions are what count. I hope these lawsuits tie up this voting process until we get a share count. What the fuck? A share count. Here we go again about the float. Here we go again. Not understanding positions versus shares. It just never ends. Too little, too late. The timing to do this is clearly to regain trust for a yes vote. They know the market is about to crash and they will have to pay up. There's a classic they. That is a classic they. She is. All right. Okay. I always go longer than I want to go. At this point, I might as well go until 10. Okay. Let's see here. What do we have? Anything else? Or I could just end early. Well, quote unquote early. Not really early at this point. Early becomes late. How about this? How about this?
So,
too long. Let's see what he says.
If you guys are watching YouTubers that are still using the word shill and FUD, you need to change the channel. Those idiot words
And guess what? Words we don't use. I mean, seriously, we if we say shill, we're talking about the true meaning of the word, but because nobody knows what it means, we don't use it. Also, FUD,
that these
we
YouTubers are
don't use those
using,
terms.
they learned them by watching other YouTubers. None of these people on YouTube that use the word shill, that use the word FUD, are real traders. Anyone that uses those
Boom.
words are
Boom.
idiots. They simply use those words because they learned them from trades and other YouTubers.
And they know that their subjects, their marks, the people that they're trying to keep ignorant, they understand these false usages, and it gives them clout in the community and all that kind of stuff too.
When they were following this MOAS nonsense and stupidity, no real trader, no person that learned how to trade in school, no person that is a trader by trade,
That's right.
uses words like shill or FUD. The only people that use those words are people that heard them from other YouTubers and jumped on the bandwagon and used words like that.
And it's always used to dismiss information that's not supportive of what they think. So it doesn't matter if you have facts or not. Doesn't matter if you have substantiated, rock solid facts behind you. If they don't like it, you're a shill, and that's FUD, and that's retarded. That is the dumbest thing. I mean, that's like willful ignorance, willful fucking ignorance. And they say that, yeah, it is fear, uncertainty, doubt. I guess the usage is like, you are trying to create fear, uncertainty, and doubt and get me to sell my shares by saying that. No, I'm saying it because it's true. What you do with your bullshit shares, nobody cares about. But that doesn't change the fact that X, Y, and Z. No, you're just trying to create FUD. No, I'm just trying to correct the misinformation that gets put out here every day. No, you're just a shill. Fuck you. Go buy more AMC. You know what you should do? Go buy more AMC. Go for it. Actually, go buy more No, AMC. I don't know.
Also,
Whatever. Doesn't matter. Both worthless.
if you have people on YouTube telling you that they're up 7% on their AMC shares since January or December of 2019 or 2020.
And I'm going to give you guys the link to this video. Here's the link to 𝓻𝓪𝓷𝓭𝓸𝓵's video. We can watch it on there. Or you can watch it on his channel and also subscribe to him. He's a friend of this channel. But Bad Back saying that it's dismissive, calling someone you don't agree with crazy without providing context, which is absolutely the case. And I'm just going to expand on that a little bit to the cult nature of this. It's divisive language. It's um, it's all or nothing language. It's black and white language. It's black and white thinking. You're a shill. That's FUD. No, that's the other. That's what separates us from them in their narrative, you know. Um, and so absolutely, it's dismissive, and it creates this um, cult essentially. So there's the link to this video. I got to run, so go watch the rest of it. It looks like it's really good. I'm gonna leave it up here and check it out later. Um, One last question here, Jorge. Scott, are you short on AMC? And if not, why not be short on AMC? I don't discuss the positions that I have. I'll say, I trade this or that. As far as any positions that I might have, I don't really care to disclose that. Um, simply because I don't want to influence anybody either way on anything, really. But certainly when it comes down to positions, yeah, no, I don't want to disclose that, oh, yeah, I just shorted 200 shares. In the interest of this, uh, I'll just tell you, I have never shorted AMC. I've been long shares and I've traded call options and put options, but I have traded them in the past, but don't get into that. Don't get caught up in that trap of, and I'm not saying that anybody is, but you know, um, I'm just saying don't get caught up in this trap of I'm bullish on the stock, so if you're short, you're an asshole. That's bullshit. And I'm not saying that anybody here is saying that. Don't take it the wrong way, but I've heard that more time. If I had a quarter for every time that I heard that on this channel, people said that, left it in comments, said in the chat, whatever, never actually to my face or, anything like that, of course, no. But um, I wouldn't need to trade because I'd already be I would already be rich from that. But people have different opinions on where things are going. Doesn't mean that it doesn't mean anything beyond that. Um, and like I said, I've never wanted to convince anybody or change anybody's mind about anything except the one thing that I do want to get across is nope, I'm not muted. Just a pregnant pause. The one thing that I do want to hoped to achieve is to show the value of evidence-based thinking and evidence-based action. So look for the evidence. Somebody says something, okay, that's cool. I don't know if it's true. It's cool though. It would be cool. I'm gonna have to go do some research, especially when it comes to spending your money. That's the thing. Like, and if the evidence leads to short, then and I want to make money and I feel like trading that, I'm gonna go short. I don't give a fuck what anybody thinks. Or if the evidence leads long and it's on Mudrick Capital, it's not. Um, or, you know, Citadel goes public, I'm going long on that shit. Absolutely. Whatever, you know. So those are examples, not real realities, but um, what people decide to trade is their business. They may have reasons for doing it. They may not have reasons for doing it. We can look at whether the reasons are substantiated by facts. At some point, there becomes, there's a line of feeling. I feel like this will, or I think that this will, and that's not based on facts. People are free to do whatever they want. I've just found that most of the time when you go with the facts, you're better off. And if there's any doubt, then the best trade is no trade for me. Nobody said you had to trade anything. So anyway, but I don't talk about positions other than to say I pretty much just trade index options, uh, Nasdaq, QQQ, SPY, sometimes the Dow. Um, I don't have time to do anything else, and I don't want to influence anybody to do anything anyway. And it doesn't matter what I'm doing; it just doesn't matter. Questionable Chilo. Questionable articles on Seeking Alpha that look like they were paid for. Yes, I agree. Our position isn't short or long. We're correcting misinformation and debunking conspiracy. fairy tales. There you go. Now do what you want. But the Moas fairy tale is not reality. That's it. That's it. Just like these grifters on YouTube with their campaign to find new bag holders to use as exit liquidity for their horrible financial decisions. Yes, exactly. I mean, bad back. You got it. You got it, my friend. All right, Chris, Mr. Two Sides to every trade. And Chris is on both sides of it, both sides of the trade. And everybody else, Ron and Model 3 Dude, Jorge, Raven, who slid out at some point, but I'm so glad that he was here. I really am. Hopefully we'll see you in Telegram. Hopefully we'll see you all in Telegram. Actually, come join the Telegram chat. Links in the description. There's also a Discord link, which is a work in progress, but I really would like to move everything mostly to Discord just because we can have multiple rooms, and I've got an area in there with files of trading books and stuff. I mean, but I understand too, you know, you don't want to be associated with Scott fucking Allen, then don't. But anyway, no play out today. Actually, nah, no play out today. We're just gonna call it a day here. Actually, yeah, that's it. Have a good one. I'll catch you guys later this week. Now, roll another blunt.
Roll another blunt, man.
These is good times. They are good times. I enjoy this. It's fun.
You full of shit.
And it kind of takes me back to when I used to be a teacher. So, anyway, see y'all.